Ladies and gentlemen, bibliophiles and finance aficionados, today I'm thrilled to dive deep into Capital Ideas Evolving by Peter L. Bernstein. This gem of a book gives us not only a rich tapestry of financial theory, but also a map that charts the evolution of capital thinking. Fasten your intellectual seatbelts because we're about to embark on a witty and engaging journey through the minds that have sculpted the modern investment landscape. Top 10 insights, buckle up. 1. The efficient market hypothesis. More like efficiently debatable, right? Oh, the efficient market hypothesis, EMH, dear friends, acted like that know it all in the room for quite some time. It assumed every bit of information out there is baked into asset prices, and all of us, like diligent ants, are working towards a perfectly rational investment picnic. But Bernstein tells us this picnic comes with ants of its own. The behavioral economists are crashing this party with a cooler full of biases and irrational behaviors that can skew the market. So when we think about it, EMH might just stand for exceptionally messy hypothetically. 2. Adventures in behavioral finance. Indiana Jones got nothing on these guys. Here's where we introduce the swashbuckling adventurers of this finance saga, behavioral economists. They have unraveled mysteries that could make the Ark of the Covenant look like a kindergarten puzzle box. The book tosses us the whip and hat, guiding us through the jungles of cognitive biases and emotional reactions. Why do investors hold on to losing stocks? Why do we think we can beat the market? Bernstein artfully demonstrates that we might be the most unpredictable variables in the equation. 3. From Russia with Math, the rise of the quants. In an era where quant is as buzzworthy as kale salads in a hipster cafe, Bernstein sheds light on the origin story of these mathematical mavens. We venture from Russia to America, following the likes of Harry Markowitz and his revolutionary portfolio theory. In the world of finance, diversification is more than just avoiding putting all your eggs in one basket. It's about making an omelet that won't leave you with egg on your face when the market takes a dive. 4. Irrational exuberance. Aren't we all just overexcited teenagers at a pop concert? Schiller's term, irrational exuberance, captures the sort of investment zealotry that precedes financial hangovers like the dot-com bubble burst. Capital Ideas Evolving shows us that markets, just like teenagers, go through mood swings and sometimes need to be grounded in reality. Next time you find yourself swayed by market frenzy, just remember Bernstein's cool-headed lessons, or you might just be the one screaming when the bubblegum pop market hits a sour note. 5. Beta boys and alpha gurus, the search for the investment holy grail. Ah, the alphas and betas, not just Greek letters, but puzzle pieces in the market's game of Scrabble. While beta reflects how much a stock can get a sunburn from the market's UV rays, alpha looks for the sunscreen, the elusive returns beating the market trend. Bernstein introduces us to the rock stars seeking alpha while trying not to get burned by beta in an ongoing festival of risk and reward. 6. Is your portfolio well-traveled? Global diversification as the new norm. Once upon a time, keeping investments closer to home was like dining at your favorite local joint. But Bernstein's book expands our palates, encouraging us to taste the potential of a well-traveled portfolio. Global diversification is akin to culinary exploration. Not only does it sophisticate your investment flavor profile, but it also spreads the risk like a fine pâté across a financial baguette. 7. The information superhighway, on-ramps, off-ramps, and pile-ups. In the race to make sense of voluminous data, Bernstein highlights the establishment of the information superhighway, with investors and managers clinging to the steering wheel hoping not to miss the exit to Profitville. Capital Ideas Evolving teaches us that this superhighway has no speed limit, but it does have its fair share of pile-ups. Information is power, but without a GPS, good practical strategy, you might just be roadkill in the Wall Street race. 8. Index funds unleashed. When keeping it simple isn't stupid, the investment world's version of a Zen garden. Index funds epitomize less is more. As Bernstein enlightens us, these passive funds offer a low-cost kiss, keep it simple stupid approach to investing. By being the tortoise in a world of hares, index funds have shown that slow and steady often wins the race, proving that sometimes the best action is inaction. 9. The rise of private equity. Knock, knock. Who's there? opportunity. When traditional markets feel more like old news, Bernstein escorts us behind the velvet rope into the club of private equity. These are the investments that don't text back because they're not listed on public exchanges. Capital Ideas Evolving spotlights how private equity is like found art, believing in the potential where others see a blank canvas. Sure, it's high stakes, but Bernstein reminds us that without risk, there's no art in the deal. 10. The human factor, where rubber meets sky. Finally, Bernstein brings us back down to earth, reminding us that behind every algorithm, every theory, there's the human factor. Our dreams, our fears, our hunches paint the pixels on the vast canvas of the market. The markets may be a complex machine, but the oil that keeps its gears turning is our very humanity. Ladies and gentlemen, as we disembark from this insightful excursion through Capital Ideas Evolving, let's appreciate not just the knowledge consumed, but the laughter shared. After all, finance, at its core, is profoundly human. Whether you're a bull, a bear, or just enjoy a good investment safari, Peter L. Bernstein has equipped us with the binoculars to spot opportunities where others see mere mirages. Thank you for joining me on this journey of discovery. And remember, in the wild savanna of investment, it pays to have a keen eye and perhaps a touch of wit.